Good morning. It's April 24th. We're in the heart of earnings season. So let's look at two things today. First being, where are we in earnings season on our Bloomberg terminal, and then heading over to the Longbow dashboard. What do we see here in terms of surprises? Overall, companies are surprising by over 5.3% on earnings. On sales, it's about 1.9%. So overall, it looks pretty good, right? Well, what you need to do is really kind of like go under the hood. So remember, it's like 88 out of 500. So there's still a lot of wood to chop. But materials are surprising well. Industrials, you've got obviously a lot here in consumer discretionary, almost 20% surprise. But that's because a lot of the first quarter numbers were brought down by analysts. You do have negative outcomes here in technology. So earnings aren't going as well as expected by the analysts there. So that's important to know. And, obviously when you look today, you saw some companies where, price and volume are doing well, like Coca-Cola. And then others like Procter & Gamble, where they had hiked up prices, but demand was soft. So volume was not as good as expected. So you really have to be looking at the details, or what are people reporting, and then make your judgment on, from a fundamental perspective, where do you think that'll be heading over the next few quarters. So talking about the next few quarters, I want to look and change over here to the growth panel here. What's going on? Well, in the first quarter, this is sales is in red, earnings is in blue. Let's look at what people think is going to happen. They actually think, okay, we're going to be bottoming out here in the first half of the year, and then we're up and away. So we're going to see, double-digit benefit in profits translating into earnings heading into the first quarter of 2024. Well, I try not to bet in markets as much as I do the math, have a process, have a framework, and then act on it. And my framework says that seems pretty aggressive. Yes, margins are declining. Yes, they will eventually improve, but that would mean that you're really seeing a benefit here in 2023 into 2024, and that seems pretty aggressive. We know that the Fed is going to keep hiking rates at least one more time. Inflation's high and sticky. You probably saw from our notes this morning, hedge funds are betting against treasuries, so believing that yields are going to go up because inflation's high and sticky. Well, what would that do? More hikes mean that they're going to see more damage to the economy because growth is going to slow more. That's going to translate into less demand and in hurting margins if inflation's sticky, hurting cash flow, lower buybacks, lower dividends, not good for security prices, especially those with higher beta. So with that all in mind, that really should give you a framework of what should you believe, in listening to the Q&A of companies in the next few weeks and listening to why they're choosing to do their guidance. It's because they don't have a lot of data, so they're just keeping guidance, or which could mean that next quarter, the next few quarters, they would have to come back on that guidance and potentially adjust it downward. Or are they resetting the bar lower now? Or is there data to believe, just like you saw with Coca-Cola, that things could be okay because there's not demand destruction? We saw one part last week with CDW, obviously a lot less tech CapEx spend. So you got to be really careful for every single type of company. Don't just look at the headlines, look at the details. So next, I'm going to be going over to the Longbow dashboard. I'm going to let you know about 3 companies. This morning, Amazon actually was overbought. So it's moved in the last, call it, hour. It's more neutral now. But you still see oversold signals on American Tower, so cell towers here in the US, as well as Microsoft being oversold. So, again, we're going to be heading into earnings season. So that's really when you want to spend time on fundamentals, to be understanding what do you expect out of these businesses in the future, and then marrying those with the technical. So from a technical perspective, if you get through earnings season and or you think that there's going to be not just a positive event, but positive fundamentals, you'd be looking for oversold signals to be entering from a technical perspective. If you're worried about a company, obviously it's overbought, that's not the time. That might be the time to be trimming it and or hedging it if that's what you're owning. So again, you want to be marrying the range signal with your fundamentals, as well as what is the trajectory. So Amazon's bullish short-term, bullish medium-term. We did get an overbought, so that might mean trim or hedge. And that could be different from Microsoft. Like, people are probably worried about Azure coming into the earnings season, but this is bullish. So if you have a fundamental view, it would marry with your technical view in order to add to the position. But we do obviously flag that it's rarely a good time to be doing that right before the open the envelope event of earnings. So this is something you need to be watching throughout the earnings season to be able to shifting your exposures to those that match your macro, your fundamental, and the technical through Longbow. That's it for today, and we'll see you back tomorrow.